Hi, welcome to Jesus Before Money. My name's Corey. Last video I made, I said, listen, I'm not going to come back on here and warn about this stuff unless I feel I need to warn. And so it is time for the warning, right? What is everyone hearing in the media? Rate cuts are bullish. Tried to tell you they're not bullish. Bitcoin's going to $1 million. Told you to wait for the pullback. And then the stock market's going to make new all-time highs. Now, maybe all these things are true in time, right? But right now, last video I said ride the wave until it breaks. Well, I have pointed out this parallel channel, and now I see this parallel channel out there a lot. It's a very easy parallel channel to find. But I started talking about this months ago, and we're up at the top end of this, okay? Now, this is the SPX. This is the S&P 500, and this is your COVID low. So from COVID low, we've literally marked the bottoms. This is the tariff sell-off bottom, and this is the 2021 high. But anyway, I really like this parallel channel, and it's warning us. And what is it saying? Well, it's saying this is a weekly chart. Right, let me get there. It's saying that we tried to break above and put in a massive weekly topping tail, okay, and have since reversed and started to approach today, which is Friday. I always forget to say this, Friday, December 5th. Next week on the 10th, Wednesday the 10th, is the Fed rate cut decision. We'll talk about that. But now, typically when you have a topping tail, you retrace to the 50% level, which was also a gap fill. We'll go into that, and we're getting rejected. This is the weekly, but if we go to the daily, you'll see what I'm talking about. See, now here was our last gap. The last gap to be filled on the S&P 500, on the SPX. And what did we do today? We filled the gap, and we pulled back. Okay? Now that's like, well, that's maybe nothing, right? Yeah, it's maybe nothing, but then look at this pattern. I'll use my little drawing tool to draw it. A shoulder, a head, and we could be rounding out the shoulder going into Fed rate cut decision. And you're like, Corey, wait, I thought if they cut interest rates, that's bullish. Interest rates are coming down. I've pounded the table on this, and I know I don't have a big following, but this is the Fed rate cut. This is the federal funds effective rate. When they hike interest rates, the interest rates that on the rate interest hiking cycle, you don't have problems. You have problems when they cut. These gray bars are recessions. Every time they start cutting rates, you get recession, cutting rates, recession. This is so here's .com, recession. Here's the 2008 financial crisis. Recession. Here's COVID. Before even going into COVID, we're heading into recession. Here we are now. You're not telling me there's not going to be a big fat gray bar at the end of that? I'll just put it this way. It would be an anomaly. Okay? So it's possible, but it would be an anomaly. Okay? So potential inverse head and shoulders pattern, which I find very interesting. If I just take this high, oops, let me get rid of this. Give me a second here. Sorry about that. If I just take the high from here and I come down to the neckline, right, we're ways off from this happening, but it could happen quick. And I come here, let's just say we break here. Where does that ultimately take us? Back to this top, okay? And it's actually just slightly above. It would actually be this gap fill, this gap right here. But ultimately, it takes us to about 61.45, okay? And that's what we're facing. We're facing a retest of the breakout from before we went into the tariff sell-off. That's what we're looking like is very probable. And then you're like, Corey, okay, well, what's your thesis on that? Well, we're going to jump into the 10-year yield, okay? I showed this 10-year yield chart with this declining parallel channel and a breakout. When you break out from something like this, you usually continue higher. But I thought they were lowering rates, Corey. How are the interest rates going to go up? Too much debt. That's how. There's too much debt. We're running $2 trillion deficits. The debt just keeps growing. Who's going to buy all this debt? Buying U.S. debt, the U.S. is almost insolvent. Eventually, we're going to completely collapse. I don't know when that's coming, but it's going to happen. And it has to happen for the Antichrist and the beast system to come into play, right? America is not going to be in the picture. Okay, well, just doing a simple fib from the highs back in 81 of the 10-year yield going to the lows in April of 20 during COVID, right? Just the 50% mark is up here at 8%. And we have broken out and we've been consolidating in a bullish pattern, okay? Now, I'm going to go to the daily. That's a weekly chart. Let's go to the daily and let's zoom in on the micro pattern, right? We've had this, these are our support lines. Now, we broke this support. And in fact, back here, I was kind of thinking we had potential inverse head and shoulders when we were going to explode up from here, but we didn't. We came down. But now, heading into next week, what do we have? We have a potential inverse head and shoulders heading into the interest rate cut of next week. And I know you're going to say, well, Corey, when the Fed cuts rates, interest rates are supposed to go down. Well, the Fed only controls the short end. They don't control the long end. Yes, ultimately, interest rates should come in, right? But what's very interesting is right here, this big green candle, that is 23rd of October. That is when the Fed last cut rates. Guess what happened? The 10-year yield did not go down. The 10-year yield went up. It went up. It actually broke out of this descending wedge, retested the wedge, and has since been pushing up, forming, let me use my little tool here, an inverse head and shoulders pattern. Now, what does that mean? Well, that means that, to me, it's possible interest rates are going down, but it's more likely that interest rates, you take the low to the neckline, and you add that to the breakout. Let's say we break out there, we potentially are coming back towards 4.5% on the 10-year. Now, what is that going to do to the stock market? Interest rates go up, especially if they spike unexpectedly, and everyone's shocked. Why are interest rates all of a sudden spiking? It's because the bond vigilantes, the ones that actually buy our debt, other countries, they're in trouble too. You know, they got to bail out their own money systems. They're not buying U.S. debt right now. So this is potentially going to be a big problem. And sure, the Fed can step in and buy its own debt, you know, buy the treasuries. Essentially what's probably going to happen, because who else is going to buy them? But this is very intriguing heading into next week. A big pop-up potentially on the 10-year yield coming. And we've already seen it multiple times. When the Fed cuts rates, we get a big pop. So just be prepared. And know that we just filled the gap, potential head and shoulders. Okay? And then the big problem right now, this is the Japanese 10-year yield. You're like, who cares about Japan? Well, it's called the Japan carry trade. Okay? And what that is they suspect over $20 trillion has been borrowed from Japan, the yen, to invest in American stock markets, to invest in the bond market. Well, guess what's happening with the yen? The yen has been spiking because nobody wants to buy the yen as well. And when you could literally borrow the yen at negative interest rates, I don't know if you can see that, but that's a negative 0.278%. They are literally giving the yen away for free. And you could use that money to buy, a U.S. Treasury for yielding X percent, and at least a positive percent. Or you could use that money to invest in the U.S. stock market and try to get returns. Well, when that money that you're borrowing at a lower interest rate now starts to explode to the upside, and which is kind of eerie, back here, this is 2006, 2007. So the highs we're now approaching the highs of the Japanese 10-year before the great financial crisis. Let that sink in. Okay? So they keep putting their pom-poms out there. We're going to new all-time highs. Rate cuts are bullish, yada, yada, yada. But I'm telling you, there is a lot of systemic risk for a massive sell-off, a massive jump in interest rates that's going to catch everyone off guard. Okay? And then lastly, Bitcoin. If interest rates are so bullish, why is Bitcoin now today below $90,000? Okay? Not only that, this is my fib. I have a lot going on here, but we broke this uptrend, crashed. Now we have this uptrend, we're testing, right? And guess what we have on Bitcoin? Anyone see it? A potential shoulder, a head, and a shoulder. So Bitcoin's going where? Wait for the pullback. You know how much grief I got for that video? People commenting, I don't know what I'm talking about. Really? Where's your crypto gone? Let's see where this break takes us. Now this is also interesting. When you have a trend line, this trend line down here, that was support, broke, now came resistance, and broke out. You always retest that trend line. This head and shoulder break literally takes us back to this trend line, down around $30,500. I'm telling you that's going to be an epic time to buy. But just imagine what type of economic conditions we're in if Bitcoin's at $30,500. Imagine MicroStrategy. Where's MicroStrategy? Are they even a company at $30,500? No, they're probably going to get delisted. Just the risks are there, okay? Now, before this head and shoulders even plays out, there's a lot that can happen, right? It's just on the back burner of it's out there. And then Bitcoin, I was one of the first that I remember, that I can tell, that brought up this trend line from here to here to here to here. It's literally marked the top the whole way up. Bitcoin has not been able to break out. So where's Bitcoin going? My bet is we're gonna bounce off of this this neckline, this inverse, the head and shoulders neckline, to put in another shoulder, and then we'll break. We'll catch support on this upsloping trend line, maybe retest. We're gonna bounce around, but ultimately the biggest risk and the best buying opportunity of a lifetime is probably gonna be $30,500. Okay. Now with that, I hope that I'm wrong, but that is the risk, and that is my warning. Specifically, that topping toe I showed, you know where we're at, and then look at this. We filled this gap on the S&P 500 and have sold off completely. Probably, most likely, going to be rounding out the right shoulder. Shoulder, head, most likely going to round out this right shoulder. Most likely will break. And most likely, we're going to retest the breakout highs from the tariff sell-off. This February 2025 highs. Most likely we're going to retest. So just imagine if the stock market sells off, 10, 11%, where's Bitcoin going to be? You know, in the $50,000 range. If this breaks, then, you know, we're in bigger trouble. I mean, because last thing I'm going to leave you with is this is a parallel, okay? This is a parallel. We're up here, right? Ultimately, we might catch support here, but if we start putting in a bear flag and head lower, you know, we're going to retest the lower end of this trend line, of this parallel. And if that breaks, guess where we're going? Because you might not see it yet, we're probably going to catch support right here. Okay? This was former resistance, came former support, right? So we'll bounce here, but then what else do you see? A shoulder, a massive head, and then another shoulder. For ultimately, this move, I think, takes us down to the COVID low. Hold on, let me 1 second. Not quite. We would get close. Anyway, This is, this is ultimately a weekly chart, so that would be maybe 2026, 2027. We're talking about a long time before we get all the way down there, unless we just have a major implosion. But the risk, the first test is going to be this early 2025 high before we sold off on the tariff news. If that breaks, then the next test is going to be here. And then ultimately that breaks, we're going to probably come into this pivot right here. But anyway, it's years from now. But the risk right now is to the downside and upside in interest rates. So what are they going to do to save it? The last thing I'm going to say is I really believe crypto is the bailout. Crypto is the bailout. Once all this starts to implode, it's not bailing out the dollar. Where are we going? $50 trillion in debt. I think it's literally the move into the digital era. And that will be the time to buy your crypto. You can start nibbling on it now, as I have. But literally, I believe there's going to be a major rug pull and then a buying opportunity of a lifetime right before they usher in the new digital age. And with that, God bless you. I hope this helped. It's not financial advice. It's just what I see and how I'm trading and how I make a living. And I'll yield you your time. Have a great week.